Welcome to Talk Tickers. You're here for the key takeaways from today's earnings calls, and that's what we deliver. Today, we're diving into the latest from Eugene.
All right, so Eugene just reported, and the headline number is total revenue at 197.1 million RMB.
That's a huge jump, isn't it, from last year?
Massive, yeah, up from just 49.1 million RMB year over year. Pretty significant increase.
Okay, and gross margin.
Holding at 48.3%, so decent margin there.
But there's a catch, I assume.
Well, yes, the net loss actually widened. It came in at 84.5 million RMB.
Compared to
a loss of 65.9 million RMB in the same period last year. So bigger loss despite the bigger revenue.
And that translates to the per share loss too.
It does. Basic and diluted net loss per share was 0.04 RMB. That's up slightly from 0.03 RMB last year.
Right. And their cash position.
Cash equivalents, and short-term investments ended up at 42.8 million RMB.
Okay, so huge revenue growth, but profitability is still a challenge. Let's dig into the strategy behind this. What's driving that top line?
A lot of it seems tied to what they're calling their organic house strategy. That appears to be their main focus for future development.
Organic house, meaning their own brands.
Essentially, yes. Growing their private label offerings. And the overall gross margin actually improved slightly to 49.4% in 2024. So maybe some traction there on profitability within the products themselves.
And are customers sticking around? What about loyalty?
Seems so. They mentioned a user repurchase rate of 71.9%. That's quite strong.
Very strong. Suggests the core customer likes what they're getting.
Right. And they've also been doing some internal shuffling, organizational changes, trying to improve efficiency, optimizing the business layout.
Making themselves leaner for 2025.
That seems to be the idea, more agile. They also consolidated their Our House business and some other bits in March.
Consolidating to focus.
Yeah, focusing on providing, quote, trusted, healthy living solutions and building trust through things like traceability and authentic experiences.
Let's talk about those private labels. You mentioned they're key. Any standouts?
Definitely. Pro by Audis Bus. I hope I'm saying that right. Sales hit nearly 5 million RMB in Q4 24.
Okay.
And then over 6 million RMB in Q1 25. So nice growth trajectory there.
Any other examples?
Yeah, their new Life in Coffee launched right at the end of March.
Yeah.
Pulled in over 5 million RMB in sales in just half a month. A very strong start.
Wow. Okay, so the new product launches under their own brands seem to be landing well.
It appears so. And it's not just food and beverage. Skincare is a big push too.
Ah, yes, the Surya brand. What's happening there?
They've done a strategic upgrade, new messaging, new look. The whole package. The goal is offering premium skincare, but keeping it accessible price-wise.
And is that working?
Well, look at their Soviet Pro Aslane Farming series. It's part of that Suya umbrella, premium but affordable positioning.
Okay.
It generated over 20 million RMB in total sales in 2024.
20 million. That's substantial for a single line.
Absolutely. And because of that success, they're expanding it. They just launched a Suya Pro cleansing and soul lotion.
So doubling down on what works in skincare makes sense.
Exactly. They see real demand for that kind of value proposition.
Now, you mentioned something a bit unusual, the tea therapy program. That sounds quite different from selling coffee or skincare.
It really does. It's a new initiative for 2025. It's an 80-minute wellness experience.
An experience?
Yeah, combining tea tasting, some traditional Chinese studies, meditation, and a sharing component. It's quite holistic.
And how's that being received? Seems niche.
Well, the trial phase results were pretty startling. They had an initial group of 150 tea enthusiasts.
Okay.
And they saw a 91% return rate. 91%. Some people apparently attended daily for 100 days straight.
Daily? Wow. That's sticky.
Extremely sticky. So now they're scaling it up. Plans to recruit 1,000 tea enthusiasts in April, train 100 tea therapists by June.
So this isn't just a side project. They see this as a core part of the organic house offering.
That seems to be the plan. Build loyalty, foster community, and really evolve Eugene into more of an experience ecosystem.
Interesting. And the tea itself?
High quality stuff. It's a world-winning organic black tea from Wee Mountain. Certified organic in multiple countries.
And the curriculum.
Professionally designed based on Chinese classic studies.
Yeah.
Aimed at promoting self-awareness, inner harmony. It's a whole wellness package.
So moving beyond just products, tapping into services, wellness, maybe the silver economy.
That's definitely part of the narrative. Building these health-focused communities, leveraging experiences. It's a potential pivot.
Okay, let's swing back to the financials. We know revenue was up, loss was wider. What about the expenses in between?
Right. So revenue from merchandise sales, their direct selling was 75.5 million RMB.
Okay.
And the marketplace business brought in another 19.4 million RMB.
And costs. Fulfillment caught my eye earlier.
Yeah, fulfillment expense actually decreased down to 16.4 million RMB from 24.8 million year over year.
Why was that?
Mostly efficiencies, reduced staff costs, lower warehousing and logistics expenses, and lower service fees. So some positive operational leverage there.
But other costs must have gone up to drive the wider loss.
Correct. Sales and marketing, for instance, up to 30.2 million RMB from 28.5 million.
Makes sense with new product launches and brand pushes.
Exactly. Increased business promotion expenses. On the other hand, technology and content expense went down.
Oh, how come?
To 8.5 million RMB from 12 million, mainly reduced personnel and server costs.
Okay, so where did the big increase come from?
General and administrative, G&A, that jumped quite a bit.
How much?
To 71.1 million RMB, up from 44.5 million last year.
Wow, that's a big jump. What drove that?
The main culprits mentioned were severance payments likely tied to that organizational restructuring we talked about, and also some impairment charges.
So maybe some one-off costs in there related to the strategic shifts.
Seems likely, yes.
Yeah.
Those factors pushed total operating expenses up to 126.2 million RMB from 109.8 million.
Which leads to the wider operating loss.
Right. Loss from operations was 77.7 million RMB compared to 39.5 million RMB the year before.
Okay, so looking ahead, what's the plan? How do they get back towards profitability?
They're sticking to the script. Become a global leader in organic living and advanced skincare. That's the vision.
And the path.
Focus on delivering high-value organic household and skincare products. They think they can leverage the cost reductions they've found.
Optimizing the product mix.
Exactly. Shifting towards products with higher margins and, crucially, those high repurchase rates we saw earlier. That's the key to enhancing profitability and eventually hitting break even.
And the experience side, the tea therapy.
That's central to evolving into an experience platform. They specifically mentioned embracing the silver economy with these wellness courses as a way to build health-focused communities.
So product innovation, core competence, financial discipline. The usual suspects for a growth strategy?
Pretty much. Maintain financial discipline, invest smartly in categories with sustainable growth potential and better profitability prospects. That's the message.
Okay, so if you're listening and trying to contextualize this from an investor standpoint, what are the main things to keep an eye on?
Well, first, that strong revenue growth is undeniable. It suggests market traction, right? Especially with the private labels and these new initiatives. But the widening net loss and those higher operating expenses, particularly the G&A spike, even if partly restructuring related, you need to watch if the current strategy is sustainable financially.
Makes sense.
The big strategic bet is on this organic house concept and the tea therapy. If that works, it could really differentiate them, build that loyal base, and bring in higher margin service revenue.
So it's a potential game changer, but still early days for something like the tea program.
Exactly. Investors should watch how effectively they balance the cost-cutting efforts with these new investments. And, of course, keep an eye on whether those private label successes, like Sovia Pro, continue.
All right, let's shift gears to our This Is Not Financial Advices segment. Time for some creative thinking based on these results. Got an outrageous but plausible trade idea for us.
Okay, here's one. Playing off that tea therapy program and the silver economy focus. What if you looked at a long position in companies that specialize in, say, senior-focused wellness services or related products, specifically in Eugene's key geographic markets?
Okay, why?
The thinking is, if Eugene's tea program really takes off and they want to scale it rapidly, they might look to partner with or even acquire existing players in that senior wellness space to accelerate growth.
So betting on the tea program becoming a catalyst for M&A or partnerships.
Precisely. The outrageous part is betting on such a new program driving that kind of activity. The plausible part is that the senior wellness market is growing, and Eugene clearly wants a piece of it.
Interesting. Okay, give us one more, something different.
How about flipping it and looking at the skincare success? Sovia Pro is doing well. They want to be a leader in China's innovation in beauty with this affordable premium model.
Right.
So maybe. Consider a short position on some of the established Western skincare brands, specifically those competing in the lower to mid-price tiers in the Chinese market.
Betting against the big guys. That sounds bold.
It is. That's the outrageous part. Betting against huge multinational brands. But the plausible angle is that a strong domestic player like Yunji, offering good quality at accessible prices with perhaps better cultural resonance, while they could genuinely start stealing market share from those international incumbents who might be perceived as less value-driven.
So Eugene's rise potentially comes at the expense of some established Western brands in that specific segment.
It's a possibility, yeah, based on the early success they're showing with their own lines. Again, early days, but plausible.
Okay, lots to think about there. That wraps up our deep dive into Eugene's latest earnings call. We've covered the numbers, the strategy shifts, especially that organic house and tea therapy focus, and what it all might mean.
And just a reminder for everyone listening, this has all been for informational purposes. It's definitely not financial advice.
Absolutely. Please always do your own thorough research and come to your own conclusions before making any investment decisions.
So what stood out to you in Eugene's report? Anything surprise you?
We'd love to hear your thoughts. Join the conversation and let us know.